Hello, traders. It's Sunday evening, August 20th. Don't know what the market's going to be doing yet overnight because the futures haven't opened. Perhaps we'll give it a little bit of a check before I conclude the video. The market is relatively weak. And in the last video, I highlighted 5 or 6 different shorts that you might have taken. So we're just going to knock through those, do some market analysis, kind of get our bearings for the week ahead. Then we're going to find some other plays that should work out well this week. Tesla was a short that I highlighted. Wednesday is when the video came out before the open. That stock has continued to move lower. Nice pick. SPOT was another short that I highlighted. Let's take a look at that. And you can see that was the stock open on Wednesday, so it has made some progress to the downside, by the way. The market has also been trading a little bit lower, so we got the market right. When you get the market right and you get the stock right, your probability of success goes way up. That's the goal. WYNN, you can see how the stock has continued to deteriorate. I still like this short. In fact, a number of them that I've already highlighted, I still like as shorts. So we're going to talk about what that tactic might be. NTR, basically unchanged from Wednesday. And finally, TECK, which is a very choppy stock. We can see that from the price action. The suggestion there is to wait until we get a cross, relative strength cross above zero, and then to make sure that most of the losses are preserved. And when the stock loses its relative strength, then we want to look at shorting it. So the stock is basically a little bit higher than it was on Wednesday, but now it's just starting to get into the range where it would be of interest to us. Let's put up that M30, and you can see how the stock actually has gone relatively strong. So this is what we want to see. We want to see these bounces, and we want to gauge what the stock has been able to do, because if the bounce is very meager, mixed overlapping candles, very wimpy, that tells us that the selling pressure is still relatively heavy and that this is just an oversold bounce. The next time that the stock goes weak relative to the market, provided that the market is still soft, that stock is going to lead the charge lower. Especially when you have a choppy D1 stock, you need to make sure to watch these bounces. So you don't need to short in here or in here. You need to wait for these bounces. You can see how we've got a little bit of a double top in here. We don't want the stock to really advance any further than this because it's already challenging the open of this long red candle. So we don't want it to get through there. The sellers who were there before, who drove that price down, we want to know that they are still there. That's why we want to preserve the open of that red candle. If the market is up, 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 and the stock can't get through that resistance, we know that as soon as the market starts to soften, the stock could have another leg lower. The yellow line here is the 200-day moving average, so we also want to make sure that that is preserved. So let's take a quick look at the market and see what it's done. We had a gap down on Friday, and you can see how we had mixed overlapping candles, a decent little bounce in here. Sellers weren't quite able to drive the market down. Volume was pretty decent. Should we read something into this? Hey, the market couldn't sell off and the volume was pretty good. Does that mean that buyers are interested here? Well, we did have monthly option expiration on Friday, so that might have helped the volume somewhat. But you can see that there really wasn't any big conviction here. We had a lot of mixed overlapping candles all along the way. We had some retracements in here as well. So I can't really say that this is a high quality level. At least for the time being, there seems to be a bit of a bid to the market. Let's zoom out. Let's take a look at what the market's been doing on a longer term basis. And you can see how we have a downward sloping trend line that comes about like this through here. And then you get this selling climax. This is typically where you're going to see a bit of a bounce. How do I know that there could be a bounce? Well, you've got really strong price action so far this year. In fact, this was a 52-week high right up here. So buyers have been engaged. Are they just going to throw in the towel and say, forget it? I don't want to buy this market anymore? No, they're looking for an opportunity to put some money to work on these pullbacks, and they're waiting for signs of support. So here's what I would like to see is I want to see this downward sloping trend line preserved, and that comes into play around that 445 level, which also 445 was resistance, double top, little cup and handle, breakout. Okay, 445 was resistance. Now it's support. It broke that support. We want that resistance now at 445 to stay intact. So my suggestion to members has been, hey, we've had really nice follow through on this market decline. I personally am still relatively bearish in here. We're seeing some negative news items start to pile up a little bit. We got the FOMC minutes last week. They show that the Fed is definitely leaning tightening. We've had an adjustment in the bond market. Everyone was looking for a rate cut in Q4. They're having to unwind those positions. As they do so, it drives down bond prices and interest rates start to spike. Let's take a quick look at TLT. That's the US 10-year Treasury, and you can see steady decline in US Treasuries, meaning interest rates are going higher. Does this mean that interest rates are going to scream higher into year end? No, the Fed has pretty much said, we're near the end of our tightening cycle, but we made a mistake in our judgment on inflation. We're not going to make the same mistake. So we feel that another rate hike, 25 basis point, might be justified. By the way, we have a conference, Jackson Hole, going to be taking place. I believe Jerome Powell will speak on Friday. Not a lot of news this week. We got durable goods orders. That's not a real big market driver typically. Fairly volatile number also. So we've got that conference in Jackson Hole on Friday. It's probably going to be pretty hawkish. We also have NVIDIA earnings this week. So watch to see if NVIDIA has any more push to the upside. AI obviously is the big theme. And so NVIDIA could help the tech sector a little bit, or it could hurt it if the stock starts to fall after that earnings reaction. Those are really the only things driving the market this week. And August is typically a very slow month, tends to be a little soft. Everybody's worried when the Fed is away. What's going to happen in September? Are they going to raise rates? All the other mega cap tech companies have announced, so there's no real worry that the market is going to surge higher as it has done in the past when those mega cap tech companies announce. So shorts are a little bit more aggressive, buyers are a bit more passive, and they're waiting to see if there are any kind of signs that the economy might be softening. This is a pretty substantial pullback, but you can see early on mixed overlapping candles, and that's a sign that buyers are still engaged. Buyers are still engaged. Are still engaged. What do you mean, Pete? My God, the market's going down. What do you mean buyers are still engaged? If there weren't any buyers in here, you would see about 4 or 5 of these babies right here stacked right in a row, and the bottom would be falling out. Now, here we got a bit of a selling climax because we're finally starting to take out some technical support levels like that trend line right there. If you draw it visually, you can see it right in this area about the 445 level. Let's put up the major moving averages. You can see where they come into play. We've taken out the 50-day moving average right in there. Market had been resting on that earlier in the week, and then it finally took it out. Well, that accelerated some of the selling pressure. You can see the 100-day moving average is not too far away. I believe that that will be a nice support level, and then the market should be able to hold that level for a bit, perhaps even through August, and then we could see another leg lower in September. Really depends on what the Fed's going to do. At this point, we don't really have to guess what's going to happen. We can see from the momentum here that we should be favoring the downside. We know that we can expect some bounces along the way because the market has been strong previously. Pete, what is all this gibberish? Market could go up, market could go down, market could stay the same. Yes, exactly. It is August. So here is exactly what I feel is going to happen and how I would be trading it. So we have these nice little breakdowns here. We have a decent round of selling pressure. We have fairly decent volume during this decline. So I am going to respect the decline, but I'm also not looking for the bottom to fall out because we've seen strength earlier this year. So just as we had 2 steps forward, 1 step backwards, 2 steps forward, 1 step backwards, this type of stair step pattern, the same is going to be true on the downside. In fact, early on, when you have a trend reversal, buyers are still engaged because they've learned that the one thing that's worked for them this year is buy the dip, buy the dip, buy the dip, and then you sell into strength. You sell and take your profits into strength. There's the dip. You buy. You take your profits into strength. Buy the dip. Take your profits into strength. Well, the same thing is going to be holding true on the short side, is you're going to get these nice little rallies in here that are going to present you with shorting opportunities once they run out of steam. So there are going to be a couple of pieces to the puzzle tonight for shorts. I would be relatively passive. The news has not been that daunting. We have had some news out of China where some of the property companies, the commercial property developers, have been defaulting on bonds. That is not a good sign for the market. China has said that they're going to step in and help them out, but we don't know to what degree yet. We don't want to see a credit crisis in China, and things are brewing there. So I'm keeping a very close eye on China. It's going to be difficult for global markets to rally when the second largest economy in the world is doing that. This is the FXI. It is a Chinese index, and you can see how heavy the selling pressure has been recently, taking out all of these major support levels. So if I'm looking to short, yeah, I'm going to be favoring Chinese stocks for sure. We'll see if they come up on some of the lists. I'm sure they will. Well, I already know Win is on the list. I highlighted that for exactly these reasons. So it's going to be very difficult for the market to rally when you've got a sell-off in China and you have the U.S. Treasuries selling off and interest rates creeping higher. There's also not a lot of news to drive the market. Could Nvidia spark a little pop in the market? Could there be some excitement in the tech sector? Sure, maybe. Maybe the rally happens before they even announce earnings. So what I'll be looking for is a rally in the SPY, and here's what I want preserved. I absolutely want to see this 445 level defended. It's actually 444, let's call it, right where that 50-day moving average is. So if early this week we see a little bit of a pop and mixed overlapping candles and the volume starts to dry up, that's exactly what I would like to see. The higher it goes from that point, I know that sellers are still engaged because we're not seeing on a 5-minute basis, we're not seeing stack green candles like this consecutively with little to no overlap. Very important concept, because if we see stacked green candles consecutively, one after the other on massive volume, that's a sign that there's some pretty heavy buying pressure. Well, we don't want to see that. We want to see this wimpy garbage like this, mixed overlapping candles, super light volume. Market really can't get off the deck. And the reason that we favor that from the short side is because it tells us whack, 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 whack. Yes, the market's going higher, but it can't make big sustained runs because selling pressure is relatively heavy. So we want this little wimpy type of rally to unfold, and we want those D1 resistance levels to hold, primarily 444. So this week we get a little jiggity jaggedy rally up, and then we start to flatline below that 50-day moving average. That's going to make me very happy because this downward sloping trend line will be preserved. The moving average will be preserved. We've also got AV/WAP-Q, which I can put up, and you can see where that comes into play. That's all the way up here, right around that 445 level, let's call it. So this 444 level is very significant. The closer we get to it, the more aggressive we want to see sellers be, because they're all watching the market thinking, I may not be an aggressive shorter here or here, but man, if we ever get a little relief bounce in here and this level holds, I will be adding to my short positions and increasing my exposure there because I'm bearish. And you can see they've already been able to get something going on the downside. So let's say that, hey, Pete got it wrong, and we see stacked green candles through this 445 level. Well, what do we do then? Well, we want to make sure that that support now holds, and if it does, then we might even consider selling some out of the money bullish put spreads. I am not in that camp. Let me repeat this. I am not in that camp, but you might be. You might be more bullish than I am. And so I am going to highlight a couple of stocks. I'll just show you where they come into play. They're really strong relative to the market. Even if the market pulls back, these stocks are going to hold their bid well. And if you sell out of the money bullish put spreads right now, you're going to be taking advantage of time premium decay and distancing yourself from the action. My preferred strategy right now, because it's August, because the trading light volume is light, the news is fairly light, I don't want to get super aggressive with my shorts. So day trading wise, sure, I'll get aggressive with my shorts if I see the right technical patterns. Can make my money there, find those pockets of strength and weakness, but I, on a swing basis, would be more interested in selling out of the money bearish call spreads on weak stocks. So that is the strategy I'm going to be highlighting. Let's start with the bullish side. Again, I am not going to be reviewing any of these stocks that I show you. This is only for traders who are getting relatively bullish in here, thinking that we're not too far from the 100-day moving average. We'll get a good bounce in here, and that we'll be able to skate through August and not see additional selling pressure. That's not me. I think we're going to see additional selling pressure. So let's go in and take a look at Royal Flush. We'll go into bullish Royal Flush. This means that the stock is on a buy signal on all time frames except for M5. And here you can see SU. Yeah, this is a nice little breakout in here. Very choppy stock, not one that I would be necessarily interested in selling some out of the money bullish put spreads on. So I'm just going to continue to go down and take a look at some lists that I've got here. So this is the type of stock that I would be looking for. I do like REGN. So this stock has been able to gap up after earnings, hold the 100-day moving average. Here's what the market has done. Tick, 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 lower. Here's what the stock has done after earnings. It holds the 100-day moving average. Tick, 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 higher. Yes, this is a strong stock. It does not have great option liquidity. Would I day trade it? Sure. Could you consider, it's a biotech, so you really don't want to sell out of the money naked puts on it unless you're super bullish on the company. I wouldn't do it on a biotech company because I'm not going to pretend like I know how good their product is or their clinical trials on new products. Lilly is another stock. Let's zoom out here. You can see this is a really nice high plus breakout through resistance after earnings, tick, tick, tick higher. Lilly is a very strong stock. So again, you can see Market was down, 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 stock grinding higher. Any type of pullback in here would be excellent as far as an entry point on Lilly. So it's been able to shoulder all this market selling. This stock looks like it wants to continue to go higher. So I'm going to look down the list here. I had one other stock that looked pretty good. TJX didn't look too bad. I'm not like super excited about getting long retailers, but TJX looks pretty good. You can see they had their earnings announcement here. Stock gapped up, market was soft. It was able to hold that resistance level, now support, and it looks like it's trying to hold that and continue to grind higher. So I think TJX could set up well also. Where would you sell your bullish put spread? You'd be selling it below this breakout on the notion that it is going to be able to hold that support level. Post earnings, you want to see it continue to tick higher. So those would be some plays that you could look at on the long side. Again, you want to make sure that this market drop has run its course and that you're starting to get some bounces. And then you would be able to look at selling some out of the money bullish put spreads on these stocks. I'm much more interested in seeing this little bounce unfold this week. And if we go in and add LRSI to our studies, then we're going to be able to see what the SPY has been able to do in terms of LRSI recently. And so I'm just going to add that right now, and we'll take a look at it on a daily chart. You can see how it is buried below 20. That is bearish. That tells you until the stock gets above 20, or the LRSI gets above 20, that would generate a buy signal for you. And you can see how this would have been a sell signal when it got below 80. So your log all in here, and then when it goes below 80, which is right in here, that's your signal to short. Well, what we want to see here is a meager little bounce up, but on a daily basis, LRSI doesn't move too quickly, and it's nice to use for longer term swings for exactly that reason. I'm going to go into a little bit shorter time frame and see what it's done on an H1 basis. So on an hourly basis, you can see that yes, it has been able to get above 80 and below 80. And you can see how the price action on Friday, that little drop, that gap down, and that gap fill got it almost to the point where it's above 20. So I want to see it go above 80, and then I want to see it drop back below 80. And in that time, what do you think I want it to do? I want it to preserve 444. I want to see this garbage little mixed overlapping candles on light volume, because that tells me that sellers are still nearby. So what am I going to do? Am I going to guess what the S&P 500 is doing? No, I'm going to go in and I'm going to set an alert on it. I'm going to put it for LRSI. I'm going to go into H1, and I want to have it less than 80. And I'm going to save it. Well, wait a minute, Pete. It's already less than 80 on a 1 hour basis. Yes, it is. Our system knows that it has to go above 80 and then below 80, and then I'll have that alert triggered. And so then I'll be able to evaluate how strong was the bounce in the S&P 500. Do I still want to be favoring the short side? If we get through 444 and we start blowing through 445 and we get through the downward sloping trend line, do I still want to be selling out of the money bearish call spreads? No, especially not if we got stacked green candles and heavy volume. How we get from point A to point B is critically important. So, first condition is that's the pattern I want to see from the S&P 500. Next, let's find some bearish stocks that we think are going to perform well, that we can sell some out of the money bearish call spreads on. So I'm going to go into Red Royal Flush. We'll take a look at these stocks. Now here I will review these stocks because this is the side of the market that I'm currently favoring. So in the next video, you're not going to see all the bullish picks that I highlighted. I just wanted to give you an idea of some stocks that actually look pretty decent here. Baidu, selling off hard, very, very choppy, exposure to China, so that's good. And so you would want to see this stock have a meager rally with the S&P, but you can see we've got earnings coming up this week, so it's not of interest to me. Tesla, this was a short that I highlighted in the last video. What would I like to see out of Tesla? So you get this little market bounce this week. You get LRSI conforming and doing exactly what I want it to, and you get the market not able to get through that 444 level, and then we start looking at Tesla. We can set some alerts on this also. So I'm going to right click. What kind of alert would I want on Tesla? Well, let's do an M30, and I'm choosing these somewhat randomly. If I choose M5 or M15, the stock is going to go in and out of relative strength fairly quickly. So let's go a little bit longer time frame. Let's go weak relative to the S&P 500. Let's add that. And so what would I like to see when it goes M30, relatively strong, which it is right now, and then relatively weak? Well, I'd like to see the stock have that same type of wimpy mixed overlapping candle, low volume type of bounce, because that tells me that even though the market was able to bounce a little bit, Tesla didn't go doink. That's not what I want to see, because that'll tell me that there are some buyers in there at this level. What I want to see is Tesla have a really hard time getting back up through this 100-day moving average. And you can also see there's a longer term trend line that came into play right here also, right above the open of that long red candle. I want that preserved. That's what I'm looking for. I want that 100-day moving average preserved. I want the open of this long red candle preserved. And that opening was around 226. So here's how I would play Tesla. And here's the trade that I'm going to be highlighting in the next video. Market does what I've told you it would do. Get that cross back below LRSI 80. Wimpy bounce, can't get through 444. Tesla tries to bounce with the market, really struggling to get above the 100-day moving average, can't clear the open of this red candle. Then I'm going to be looking to sell an out of the money bearish call spread keying on that 250 strike price. So what would I do? And why did I pick 250? Because that is a resistance level. That is the 20-day moving average. And we also have a trend line right here that's also been breached. So 250 should stay intact. I would sell a 250, 255 bearish call spread, try and get a $1 credit for that. Stay as tight in as you can from expiration, meaning 3 weeks would be okay, 2 weeks would be better. Wouldn't want to go too much further out than 3 weeks. So that's how I would play Tesla. So in the next video, let's see if it sets up. Alibaba, let's take a look at that. Very choppy, Chinese stock, double top, lower high. Let's go and see where these trend lines come in. Yeah, those are pretty significant trend lines in here. So this stock, if the market bounces, we want to see that 100-day moving average and that 200-day moving average preserved. Stock can't even get back there. Why is that significant? Because it tells us that traders who are looking to short the stock are aggressive before it even gets there. They're thinking, it's not going to get there. It's not going to get there. I want to get my short off here before the stock and the market roll over. So they keep the selling pressure on, and that's why that resistance level stays intact. So I'm not super crazy about Alibaba just because it is very choppy, which tells me that there could be some short covering rallies in there. So not my favorite. We're going to keep looking. Go to FSLR. This is a nice little breakdown, another choppy one here. Gee, could I If the stock is not able to get through this resistance level, it doesn't set up that well because of how choppy it is. I think I can find better. And you're going to find oftentimes I have people asking me for setups and, is this a good trade? Is this a good trade? And I think in my mind, is that the best stock you could find? You flipped 100 charts and that is the best one that you could find? If you don't have that feeling that, yeah, hey, this is the one, I really, really, really like this one. If you don't have that type of feeling, keep looking. So I do like Mara here. Let's zoom out. Now it's got $12.50, $13 calls. Here's what I like about it. This is a fairly long-term breakdown. These are our automated trend lines. So you can see how the stock easily breached that 100-day moving average, and we have horizontal resistance also coming into play right around that $13 level. So 13 is kind of our key level that we want to see preserved. We'd like to see that 100-day moving average preserved. You get that little market bounce in here this week, and Mara can't get through that 100-day moving average. We've already seen pretty heavy selling after earnings, so we know that sellers are fairly aggressive, good volume. So we want to see this stock struggle to get through that 100-day moving average. Would I be super upset if it got up to 1250 or so, or even 13, which is that resistance level right there? I'd like that to hold. So I don't want to see it above 13 at all. If this unfolds, the market starts to roll over, LRSI below 80. This is going to be a nice short, and I think you're going to see another leg lower in Mara. So maybe you sell a $13 call, buy a $14 call, and you do that for a credit of 20 cents. That trade would set up well for me. I would do that trade on the notion that the stock is going to be able to preserve that resistance level. And as soon as the market softens a little bit, you're going to see the stock sell off. So I like Alibaba. Billy is another Chinese stock. Win, I highlighted before. I like Win as a short. Maybe we'll wrap up here. Uh, Same type of premise. I want to see that 200-day moving average here preserved. Market bounce, roll over, stock cannot get through there. And ideally, the open of this candle, which is around $99, holds firm. If it does, then I can sell my bearish call spread up here, maybe sell the 102.50, 105 bearish call spread, collect 50 cents for that. I like that trade. I think this resistance level is going to hold. I'm seeing some weakness in here. We have multiple trend lines that have been breached to the downside, and this is a significant trend line. I think these stocks are going lower. I think the market is going to go lower. So, yes, I'm bearish on them. I just happen to be in a part of the year right now where the trading volumes are going to dry up, and that is why I'm not getting real aggressive with my swing trades. Rather distance myself from the action and take advantage of time premium decay. Pete, can I buy some put debit spreads? You can do anything you want. It depends on what your level of confidence in the market is. How bearish are you? And why are you so bearish? And why are you so convinced that you are going to get a big market drop or a big drop in that stock during what is traditionally a very quiet time of the year? The market drives all of our trading decisions. That's why we put such a great emphasis on what it's doing right now. Take one more look. Riot, I like this. This is a support level right here. This is a breach. You can see how there's heavy selling pressure in this. It's broken below. This was resistance. Breakout to the upside. Now that support has failed. This is what we call a failed breakout. So anybody who bought here, buy, 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 buy. Oh, this thing looks great. Well, those buyers who bought right in here are now flushed out. And so that backside selling pressure can be very heavy. What do I want to see in Riot? Market bounces, 100-day moving average holds. This is going to set up an excellent shorting opportunity. I think that's the last one I'm going to look at. WBA was a stock that I thought set up well for shorting last week. You got a really nice little breakdown here of a low plus trend line. You can see these low minus trend lines also failing in here. So I think WBA is another very weak stock. You don't want to see it above this level with the market rally. When it rolls over, this will be a good short right up in this level. So that gives you plenty of stocks to look at. If I had to pick a couple that I would really lean on, um, I like the Tesla short. I like the Mara short. I like the Riot short. I like the Win short. So those four I will review when I do my video, probably on Wednesday. So good luck with your trading. There's not a lot going on this week. NVIDIA earnings, durable goods orders, not a big deal. Everybody's going to be watching for that Friday Jackson Hole speech from Powell. They're looking for anything that they can latch onto right now. So I am expecting hawkish remarks from that. Don't know that it's going to be a big market driver, but if it is, then I would say that it favors the short side, and that kind of plays into look for a little bounce early in the week, and then you get Powell splashing cold water on the market, and then you get a little bit of a drop perhaps towards the end of the week. Thanks so much for watching, everyone. Please leave your comments. I almost forgot. In the comments section and in the description section of today's video, I'm going to provide you with a link to an interview that I did with Chat with Traders. It was about 90 minutes long. They covered lots of topics, and this will give you an insight into my career and also my trading philosophies. A lot of really good questions asked by Ian Scott. So please make sure to watch that. I think that you're going to get lots of tidbits of information that you'll find useful for your trading. We will see you Wednesday. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.